Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Hope you're all having a great week. Welcome to the Heritage Market Update for Thursday, July 28th, 2022. A lot going on this week. We got earnings, we got the Fed, we have GDP data. We got a lot to talk about. We want to fit it in here and cover all the important parts so you know exactly where we stand on this market. So first, let's start with the market itself, looking at a chart here of the NASDAQ represented by the QQQ. NASDAQ 100 index. So just an update to the chart we posted last week where we talked about how the index was showing some constructive signs, making what we call higher lows, where in this sequence that it's in, we see an advancement and a retracement, but the retracement is shallow and the index has gone on to new intermediate term highs. So now, after a short 3-day pullback, we had a nice upward surge yesterday. Big rally, about 480-point rally in the NASDAQ coming off of the back of the Federal Reserve meeting, which we'll cover in a moment. But this brings the NASDAQ right up into a critical resistance level, right? As illustrated here by the line drawn overhead. The last time we came into this resistance area, the market tried to get above it, didn't have the momentum to do so, and we went on and made those new lows in early June. Now, at this point, these lows in early June have held. They look to be, at least in the intermediate term, the cycle lows for the market. But again, right, it's a wait and see market. Market has to show and prove. And in this case here, we're trying to see if the market can get some momentum and get above this short-term overhead resistance level, right? Because we can't worry about getting back to the all-time highs until we break through some of these intermediate resistance levels and turn them into support, right? So that's where we stand with the market. Big surge yesterday. Markets open lower today, but have reversed and have gone green. So a nice red to green move, which is a good thing to see, right? We don't want to see, the previous three Fed days and Fed rate hikes going over the last 3 months. We had a big rally on Fed day, but then we just got crushed the day after, right? Kind of taken away all the gains from the day before and going lower. So that's not what we have so far here today, but still a couple hours here before the market closes. So let's get into all the different happenings in the market this week. So first we had the much anticipated Federal Reserve FOMC meeting yesterday with policy announcement by the rock star Jay Powell, right? The monetary god that he is. So 75 basis point interest rate hike was what was priced in the market. That's exactly what we got. We're talking about their resolve to fight inflation and how they're going to continue to monitor and assess where inflation is. However, we did have some very interesting change, right, in the statement from the Fed, where over the last previous couple meetings, they talked about the need to get rates higher, right? So now, yesterday, Jay Powell hinted to the fact that the Fed is reaching, or they're approaching, what they consider neutral rates. And neutral rates would basically mean that they think they've done enough work to get rates into a point where it's no longer accommodative nor restrictive, just kind of in a neutral way. Now, obviously, the way in which they have raised rates has been restrictive to the market, but historically speaking, rates are still on the lower end of the curve. So that was a big change for him to acknowledge, right, that we are getting closer to neutral, and that at the next couple meetings, the Fed will shift their outlook back to data dependency, right, which is a very big change because we know for the last 6 months the Fed has been hiking rates without any regard to what the impact of those rate hikes were, and now we're shifting to a place where they're going to be data dependent, right? So this sets it up, folks, for the Fed pivot that is coming later this year when we'll go from hiking rates to pausing those hikes to eventually cutting rates yet again. So when we talk about, right, data dependency, we'll get to that in a moment. What data are they looking at? But what we found to be very interesting yesterday is as the Fed raised interest rates, here's what the 10-year Treasury did, right? The market's barometer on interest rates fell very quickly, right? Now, since the Fed hiking cycle has begun, we saw this 10-year yield reach a high of 3.35, and it has since come off a long way, which is the bond market that is likely indicating that short-term interest rates have peaked, and it's likely that inflation has peaked. But because the Fed uses lagging data, it's going to take 30 to 60 days before that shows up in some concrete evidence. So now we talk about the Fed being data dependent. Well, a day after the Fed meeting, we got this quarter's GDP report, right? And second quarter GDP fell 0.9%. So that is two consecutive quarters of falling GDP, folks. We are in a recession. Now, I know, the media and the White House is trying to rewrite the definition of what a recession is. And again, yes, a lot of these things are labels. Nothing changes strategically from one day to another when we are officially deemed to be in a recession. But since the beginning of economic data and economic forecasting, two consecutive quarters of negative GDP has been the textbook definition of a recession. So I don't care what anybody has to say, how they want to spin it. We are in a recession. We've been telling you for the last couple of months, we think we were already in a recession. And the reality is corporate America has known that for quite some time. You've seen in the news some of the large-scale layoffs going on at some of the bigger Fortune 500 companies, and they tend to have a pretty good look, down the supply chain into the consumer to see what exactly is happening. So this is an important data point, right? Because again, we're not rooting for a recession. We think this one will be very mild because the consumer still is pretty strong. But when you have a Fed who just shifted to data dependency for their future rate hike path, and the day later you get confirmation, right, that we are in a recession, those two things add up to a Fed that's likely going to start to ease off a little bit with some of these rate hikes. We also have a tremendous week this week for other economic data as we are now in earnings season yet again. And we've already heard from Google and Microsoft earlier this week. Their reports actually were feared, to be bad, and they came in better than expected. Both stocks rose in a very nice way off of that news. And today we will hear from about 840 other companies, but the two main ones, the two most important being Apple and Amazon, right? So when you look at that, folks, combined market cap between these two companies is close to $4 trillion. So anytime you have $4 trillion worth of market cap reporting earnings, it is likely to be a big event. So again, we'll watch very closely how those reports come in, because those reports and their forward guidance are likely to dictate where the market's going to go in the days and weeks ahead. We also, in this action-packed week, we had news yesterday afternoon that Senator Joe Manchin has come to an agreement with Democrats on a climate bill that includes some energy provisions. Whether or not this will pass is a whole nother argument to make, but at least Joe Manchin was not even entertaining any of these discussions for a while because the bill had gotten far too large. So now they've scaled it down. They're focusing more on energy infrastructure and climate. And obviously, as you would expect, there's a lot of stocks today, one being Plug Power, right, that is seeing a tremendous boost on this news. So currently about a 23% gain on Plug Power, and it's really the same across the board in a lot of the electric vehicle charging stations. Any of the green energy companies are seeing a nice bid today, and it's important. It's being done on substantially high volume, right? So just as an example, a stock like Plug Power usually trades about 20 million shares a day. 3 hours left in the trading day, and we've already traded about 60 million shares. So that tells us that the move is not only one that's based on the recent news, but it's a meaningful one, right? Because it's not happening on light volume. It's happening on 2, 3, 4 times the average daily volume. So again, one day does not make a trend, but I think this is starting to show you that there's some areas of the market that are good quality investment in companies, and they've just been so depressed that any type of good news that really can kind of kickstart these very strong rallies. So again, very busy week, right? We had the Fed raise interest rates. We had a tentative agreement on a climate and energy bill. We have a ton of earnings going on. And then, of course, we have second quarter GDP coming in negative, confirming that we are officially in a recession. So when you add that all up, right, you would think the markets would be having a terrible week, but actually they're not. Markets are up for the week after a very strong rally yesterday, erased all the losses from Monday and Tuesday. So again, where we go from here will depend very largely on how Apple and Amazon do after the close today. Good reports from those two companies will send the markets higher and likely through this resistance point, which will give a lot of market technicians a positive, optimistic outlook about where this market may go from here. So if you have any questions, we're always here to talk to you about anything that's on your mind. I know this bear market's been dragging on for quite a while. It's really weighing on investors, but we're starting to see some things form under the surface here that are very constructive. So keep calm, invest on, hang in there. We will get through to the other side of this, and there will be much better days ahead. Have a great day, and we'll see you back for the next Heritage Market Update.